the 2030 is a graveyard for the Fortune 500. And this is a belief I have that goes the path you're saying, which is people don't realize that this has been going on now for some time, that companies aren't going public the way that they used to.
Hi, my name is Chris Perkins. I'm the president of CoinFund. We're one of the oldest investors in Web3 or crypto. We have venture strategies and liquid strategies. And I'm thrilled today because I get to have a chat with one of the biggest thinkers around, Jordi Visser. Now, I'm a big follower. Just saw some amazing content that you've been putting out, Jordi. Jordi looks at the big picture. He's one of the most outspoken folks who really focuses on the big picture items that are going to, that AI and crypto and how they're going to impact macroeconomics, your investments, and everything else. And so, Jordi, really wanted to welcome you. I'm thrilled to have this conversation today. How's it going?
It's good, Chris. I'm glad to be here, and I'm glad to sit down and share some thoughts.
Awesome. So we had dinner a few weeks ago, and one of the things you speak about is walking around the park, having these conversations with ChatGPT. You also talk about perplexity and how you're using that instead of Bloomberg. Pretty simple question. Like, what are you guys talking about these days? Like, what are you and ChatGPT talking about? What insights, what's hot right now? What was the last conversation you had?
Last conversation I had was about 30 minutes ago, and it was on Isomorphic Labs, which is actually a spinoff from Google DeepMind. And they've basically reached, let's say in my opinion, I'm writing a Substack on this. They've reached the point of, let's just say, having drug discovery for all diseases. So Demis Hassabis has talked about this. Google DeepMind's been involved with isomorphic since I think 2021. And the paper is really about the journey from AlphaGo, which was in 2016. And once the Google DeepMind team had accomplished that feat of winning in Go, they immediately turned their attention towards drug discovery. And the Nobel Prize was given to Demis Hassabis and another person very recently. And so that was my latest conversation. Before that, this morning, it was on the insatiable demand for copper. So never stops.
Never stops. But it feels like we're on this verge of just a knowledge explosion, an innovation explosion, because the amount of information that we have, at our fingertips now is just like second to none. Just a fascinating time. You've spoken a lot about the impact of AI on productivity. As you think of the macroeconomic environment right now, we've seen, I would love to get your take on where we are in the cycle, or our cycle's dead.
So business cycles, to me, the way that we've traditionally thought of them, which would be, let's say you go into a recession, the government either prints a lot of money or they move rates significantly lower from the monetary policy side. And we end up getting kind of a tide that rises all boats. And that time to me is over. And the reason is because the majority of the companies that are dominating the world, specifically the Mag 7, don't have any debt. They actually have a tremendous amount of cash. So as rates move higher, they have more interest in terms of benefits that come to the companies, while a lot of the historical industrial companies suffer. So the way I've described it is there's really three parts to and it's mainly the U.S. economy at this point. It depends on which country, where they are in their own cycle. But in the U.S., we've been moving away from manufacturing for a long time. Globalization has taken that mainly overseas. Donald Trump won the election trying to help the manufacturing side of the economy and get us more domestically built. But the problem is the industrial economy, or the old economy, has now become a very small portion of the actual growth portion of the economy. The digital economy is growing rapidly, and the government has filled in the gaps. And that's those 2 points, the digital economy growing without debt and the government now assuming all of the debt and needing to keep the median voter, which is driven by the industrial side, afloat, we've just ended up with this huge deficit, this huge debt. And so business cycles, the way that we would think of them, have been really eradicated. And the reason is because the digital economy has grown so fast and caused such a major disruption that the government has had to get bigger and bigger to offset that disruption.
So on Independence Day, while the traditional markets were closed, the president signed his big, beautiful bill. As you start digesting that, what do you think are the near-term and the long-term impacts of that law?
Well, first of all, it's going to take a long time to get through 900 pages. And it just shows where we are, where, to get to the point where only 51 out of 100 need to sign off on something for it to go through, but then you just keep tinkering and moving things. We're not going to get all the details, but the one thing we do know coming out of it is that we've chosen the same path of betting on growth, which probably means just more debasement, more money printing. We know the debt's going to grow. We know the deficit, they're going to talk about how the deficit's going to come down, but for that to happen, almost everything has to go right. And that just has proven to not happen at all. And when you're trying to move tariffs in and things along those lines, there's always a chance that something happens. And just as an example, Silicon Valley Bank happens, and we have to go out and create new facilities. They've talked about wanting growth so bad that they're putting pressure on Fed Chairman Powell almost weekly. And so I think the big, beautiful bill is going to end up kind of continuing down the same path. And they're openly talking about the fact that we have to grow our way out of it and not cut our way out. That's what leads me again back towards Bitcoin from the government perspective. So,
we're going to get to Bitcoin, and it's going to be awesome. But before we get to that, Elon Musk has now come out and said he's going to form this American party, this political party. And as I've been looking at it, it's kind of interesting because you're right. We're at this 50-50 stalemate, and one or two votes could shift the entirety of a bill. Do you think he's going to be successful in being able to have ball control by, winning one or two Senate seats and then, helping to really shape legislation? Do you think that's going to be a viable path forward?
Well, I'll tell you this, if you can have a mayor potentially elected in New York on the policies that that mayor is bringing, which I didn't really think was possible that we could ever go a very extreme socialist. I believe socialism would be part of kind of, the fringe, but to get it to the point where the capital of the world could actually go through this leads me to believe that I would not underestimate the anger of the people. I was at, for the 4th of July, we were having a discussion around a variety of topics. But one of the things that came up was something I had said where I just think the 25 to 35-year-old, group of individuals is really in a very difficult situation. They're loaded with student debt. Artificial intelligence is staring in front of them. It's already affecting graduates coming out of school. And so you've kind of taken away the corporate ladder while they have all this debt. So what they were promised was if you work really hard and you borrow money from effectively the government, so government subsidized, then you go out, you get a job, you pay it off over time. And then after that, you start to build a family and you go buy a house. Well, housing affordability is out of the reach of most people. So what would theoretically be kind of the American dream, you go to, you learn, you get an education, you go get a job. You're not moving up the corporate ladder. The inflation stuff is still there for the things that you need. And housing affordability is, just kind of out of whack. So I think all that leads to an anger that cannot be minimized by the demographic that is growing the fastest, because we have a lot of aging people that will die, and you're getting a shift that's happening where the country is getting older. But from a voting bloc perspective, I think one of the things that helped Donald Trump was just his focus and pivot towards crypto, which again helped with this group. So I do think Elon Musk will have a chance, if for no other reason that the anger will probably grow from people from the things that I mentioned, if nothing else.
Right, but we're also about to, as you mentioned, to witness the largest transfer of generational wealth in history, right? From the boomers to that disenfranchised demographic. What does that mean for a number of different things, like Bitcoin, for example? That's a demographic that is now, as they've been growing up, they said, wow, the best performing asset class in the last 10 years by far is Bitcoin. Is this going to be like, how is that going to impact the crypto economy, or does it just like solve everything because they're struggling,
Mhm.
the boomers die off, then all of a sudden they come into all this wealth and they do things the old way?
Well, you have to remember, I talk about this because it does matter, but the problem is when you have such a staggering distribution of wealth problem, you're not talking about a lot of people. And so the thing about it is, I do think that money is going to be shifted into an asset class that people believe in over the other side. So that'll happen, and it's good for crypto. But the problem is for the 25 to 35-year-olds, I just they're not going to get they're not all going to get a lot of that redistribution of wealth because it's really, really isolated to the top 10%, which controls most of the assets. So it's not a lot of people. And that's the issue that we've had. And that's why whenever I'm speaking, I always talk about the median voter, because
Yeah.
that median voter in the country is just not benefiting from a lot that's going on, and they're suffering. And I think the same thing will happen with their children the same way. So
If you have any questions about how to navigate the current environment, Wealthion can help connect you with a vetted advisor to get a free portfolio review. Just click the link in the description below or head to wealthion.com/free. There's no obligation, and it will just take a few minutes of your time. Again, that's wealthion.com/free. Thanks so much for joining us.
Yeah, I've been thinking a lot about this myself, and people don't realize, but 81% of companies in the United States over $100 million, they're private.
yeah.
Right. And if you're, a young millennial or whatever, and you're just an ordinary person, you don't have access to that wealth. And these are the companies that are the fastest growing, the most innovative, the biggest opportunity to generate wealth. And you're only able to access them if you're already rich. Like that seems to be a pretty big problem. I have a thesis on how crypto can help solve this, but what is that? What do you think? Do you think that's a bigger problem as I think it is?
I do. I have a take on this. I actually my weekly video this week was titled, and I won't remember it exactly, but basically it was the 2030s, a graveyard for the Fortune 500. And this is a belief I have that goes the path you're saying, which is people don't realize that this has been going on now for some time, that companies aren't going public the way that they used to. Now, there were always a lot of private companies, but the disclaimer you put on it is above $100 million. So again, if you're an entrepreneur and you want to create a business, it's never been better. You don't need capital the way you did, over the prior decade, or at least from say 2010 to 2022. What ChatGPT has allowed is for you to hire digital workers and just not have to pay them. And you can grow so rapidly that you can grow out of your revenues. And that's how a lot of these companies like Cursor getting to 500 million ARR in such a short amount of time. I believe that is a disruption for the incumbents. All incumbents are going to have a hard time because smaller businesses and smaller entrepreneurs no longer have to create something new. They don't have to come up with a new idea. They just have to go disintermediate the established ones with cheaper prices that have people. And I think that's going to happen more and more as people get fired from Meta and people get fired from Google, or they just don't get hired and people decide that they're going to go cut a little bit into their business. In Germany, where we have, where Google has 90+% market share, you can see that changing much more rapidly because it's much easier to build competitors. So the way I've looked at it is it's going to be a growth in the world that I think will be tokenized. So part of the thing that I think will solve this for individuals in the ability to invest is I do think the digital capital structure is going to change. That was where my belief in Bitcoin really accelerated, and just the general crypto world is when I started to understand that it really represented a change in the capital structure that had existed for a long time, and that it's just going to continue to change and evolve. And I think Michael Saylor has been a pioneer in that place, but I think it's accelerating. You know better than I do. I'm late to the party, but I see it that way. And I think we're destroying the Fortune 500 capital structure slowly, but I think it's going to accelerate over the next decade.
Yeah, 100%. Like we talked about that 81% of private companies, there was one public quote company that everyone had access to day one, and that was Bitcoin.
Yep.
And we saw what happened instantaneously, global access to anyone with an internet connection. So it's been pretty profound. There was a big crypto conference last week in France, and Robinhood made a number of announcements. They talked about putting tokenized equities on chain. Again, opening them up to European persons. And I thought that was interesting because like people are like, why does it matter? And I'm like, well, because you can effectively have 24/7 trading for anyone with an internet connection. That's wonderful. Maybe you can use it for collateral in some of these DeFi protocols. But what really got me interested was when I saw what they did with OpenAI. I don't know if you caught this, but what they did was they essentially launched tokenized equity of sort of on an SPV. So they were able to accumulate OpenAI. And for the normal human being, you can't just wake up and buy OpenAI out of your brokerage account. It's private. So they accumulated some. And then they started issuing tokens on top of that. It's a little bit clunky, the structure, and I'm not giving any investment advice, but essentially they put it in an SPV and then they, said, well, you have kind of access to it. But to me, like the light bulb went on and I'm like, wow, like we're starting to see the democratization of private equity into the global public, which I thought was going to be an amazing unlock over the long term. The first, they upset OpenAI, probably not the right way to do it. Yep. But like, I was like, whoa, this is something to denote. Do you think that was a big breakthrough?
Yeah. So I did see it and I saw that OpenAI immediately came out and said it's not OpenAI, don't get involved. But I think your point is valid. When Vlad gave the speech about this, he basically was pushing back on things. So I went through for the weekend to go look, and I was like, oh, good. Let me go look at Con and see what the Con's crypto event is doing. And to watch the speech and then to go through the transcript, I was more interested in the fact that everyone's feeling more, let's say, empowered. I think the Genius Act and the Clarity Act is just fueling this whole movement in terms of people talking about it and now pressing the envelope. It's one of the things that I don't think people put enough credence into is how important clarity on all these bills is bringing, and the lack of, let's say, policing that's going on and the fears that that did exist for the prior 2 years for sure, but going back probably even longer. I think that was just another sign of that the times are coming and that these two worlds are merging much faster than people realize. And the regulatory help is going to continue to have a lot of tailwinds for the industry.
It's been a 180-degree change from our perspective. I mean, I could tell you story after story over the last 4 years where, our entire industry was literally under attack and they wanted to stop it. They wanted to prevent it. And then along comes the new administration, and then they're like, "Hey, we're the government. We're here to help." And like they're actually helping. And it's just been insane because what we've noticed is that a lot of institutions have stayed out of the market because they don't want to take reputational risk. Right? They'll take market risk all day long, but don't mess with my reputation. And a lot of that reputational risk manifested itself in regulatory risk, like. I don't want to do an investment and then it blows up because the regulators, shut it down. It's so embarrassing for me. Now that's been completely ripped off the table.
Yep.
And, when I speak to institutions, they just want to have a framework. And the last administration, in order to stop it, they were very ambiguous and they wouldn't define anything because once you have defined lanes, we can build. And like, that's what Wall Street is. We work within rules and we build businesses, but they refuse to define the rules. Now we have something really big happening. And I agree. I don't think people understand how big it is. We have this thing called the Genius Act. Mm-hmm. The Genius Act is going to provide a framework for compliant stablecoins. I mean, I've talked about this ad nauseum. This is the greatest thing for the US dollar. You couldn't invent something better on a whiteboard. You couldn't design something better. It's going to perpetuate the dollar as a reserve currency for decades to come. It's good for our national security. Happy to unpack that. It's going to force buying of Treasury bills, right? It's going to be awesome.
Yeah.
You've talked about it as a bridge. In a lot of your discussions. What's your take on stablecoins and the Genius Bill?
Yeah, it was about, let's say it was September of last year that I really started to dig deep into, I'd say more the psychology of stablecoins and try to bring it more into the world of technology. And I mean, everything that you just said, just to go a little bit back. I mean, if you remember the dinner that we were at, and I remember you talking about this and us really talking about stablecoins there were a lot of people at the dinner that have been in traditional finance a long time that didn't understand it. And that wasn't a long time ago. And we kept harping on it. I could tell that people just didn't know about it. I can remember having a conversation with one of the largest digital asset investors that has a split between traditional finance and digital assets in his office in October of last year before the election. And I said, I believe stablecoins is going to open everything up. And he said, how do I invest in it? And I think that's been the problem for people is they don't know how to make money on it. Now, Circle has kind of changed that a little bit because now it has a spotlight on it, get people, a little more focused. But my bridging for it is very simple. I ran across the Mark Andreessen piece on why Bitcoin matters. And if you go back and you read that piece again, but this time you add the stablecoin lens to it and where we are with stablecoins, it really, I think, gets Mark Andreessen connected to this because Bitcoin at that time was thought about as quote unquote digital money and a way for people. This is going to expand the whole ecosystem. It's going to go, but the limitations of it eventually became clear. So I think with stablecoins, we've found the bridge between the two. And I viewed it as almost an unlocking of the hardest part to convince traditional finance people to put their money in through the digital, whatever you want to call it, black hole. They had to make that transition in. Stablecoins and the ETF in subsequent years are very powerful. Now you've given them a structure they're more comfortable with. Now you've given them a currency or something that's backed by something they're comfortable with. Then you give them regulation where they don't have to deal with as much risk as FTX and all these other things. And all of a sudden, it's really become the accelerant. But none of us expected that AI would be happening at the exact same time. And so right before I got on here, I was sick of, I'm not going to call them out, but I want to sign up for a particular, I'm in Maine. I want to sign up for a particular workout class. They only open up the slots at midnight once every day for the following 8 days. And I'm like, you know what? I can't get in. I'm not staying up till midnight. So I'm going to go build my own AI agent and I'm going to have it do the transaction for me. So that's what I was working on before you got there. Cause I'm like, I'm not waiting for this anymore. I'm just going to have a robot do it every night and sign up for that thing. And if I don't get in, fine. If I do, I cancel it. The transactions are going to explode. And so when you get the stablecoin already having growth without AI agents, then you add in the regulatory side, which is going to explode it when you've got the Walmarts and the Amazons and the MasterCard and the Visas all focused on it. And you have AI agents coming. It's a turbocharge. And so I expect it to grow as fast as token usage is growing for AI, which just means the network effects are going to start to take off with inside the ecosystem.
I violently agree. Starting with your first point, people just don't understand the space. They just haven't taken the time to figure it out. And I think Circle was a big light bulb moment for many of them. They're like, this thing just 10x'd overnight. Like what's going on? What am I missing? There's been a lot of focus on the shiny, thing called AI. But when you bring these two technologies together, amazing things happen. And we actually at our company, we identified this in 21, and we've been looking at that stack from compute to inference to training using crypto rails and of course agents. So I'll tell you about my journey. You're right. It's, one of the things about the stablecoin bill is that it suppresses interest. And so it makes the dollar a depreciating asset because, it was really designed for a payment type instrument, but it's actually a lot more than that because if you're in Zimbabwe, you're in Venezuela, it's a store of value. It's a better store of value than Bitcoin, because it's very stable. That's why, it's $1. I think you have utility because people will accept payment in dollars. And so one of the interesting things that we've been observing is that it actually suppresses yield. So what is the implication of that? The implication is that people are going to try to figure out how to get yield one way or the other. Mm-hmm. And you can do it manually. It actually quickly will bring you, for people, particularly in the developing world, into this thing we call DeFi or decentralized finance. What's DeFi? Well, it's where you can use your stable coins to lend them out to generate yield or to do a number of different things. For me, it's like, okay, this is great, but it's manual to your point. I don't want to be, waiting for this exercise class. I commissioned an agent, pressed a couple buttons, and now the agent is doing that optimization for me. We have a company called Giza that we invested in that does that optimization. Mm-hmm. So, and again, no investment advice there, but there are risks with any activity that you undertake. But that's the future. It's stablecoin to DeFi to AI. let it do the work, maximize my yield, and it's going to give us a lot more free time.
So there's one other part, and I want to take what you said at the beginning, because when you use the Zimbabwe example, I'm not sure I mentioned this at the dinner, I may have, but I lived in Brazil for 2 years. But the importance of my time in Brazil is that I was there 97, 98, and then I left effectively in June of 99. That was after the devaluation. Now, in the final 6 months before the devaluation, which was during the emerging market crisis, it wasn't about depreciation. There was a devaluation that was going to happen. And effectively, there were capital controls on. Because when you have a pegged currency and you're a dollar holder and you want to get reais, which I did at the time, to spend locally because I was getting paid in dollars from Morgan Stanley and I needed reais to live my life in Brazil. I didn't want a 1-for-1 rate when I knew that the dollars were worth a lot more because the devaluation was coming. So we would send down someone into the black market every day, not just to make transactions for people in the office, but also to send back to the macro people what the true exchange rate was. Yeah. So one of the things stablecoins do is not just protect the local people against debasement and depreciation of the currency, but also against capital controls and the ability of moving their money into something safer. Now, over the weekend, or I guess late last week, there were a lot of stories on Alibaba, Tencent, pushing for issuing stable coins, yuan backed. And they were basically saying to the government, we need to do this. And the reason we need to do this is because the US is taking the lead on this. So what stable coins are also doing, and what the Genius Act is also doing, is speeding up governments realizing they can't hide from this anymore. And this is the power of what's gone on. Bitcoin itself, no one's staggering to go. The US has to go do a Bitcoin reserve to do that. But with stable coins and watching that 99% of the backing is with the US dollar, it forces all countries, including the EU, to want to be involved in it. And so I think stable coins are not only misunderstood from the volumes and the AI components, but I think they are speeding up adoption for the entire crypto ecosystem for sure.
100%. These countries can't afford to be left behind. And I got into a bit of a spat with the BIS, Bank for International Settlements, and they thought it was a bad thing that dollars could crowd out local currencies, particularly in like the Zimbabweans and the Venezuelans of the world. They're probably right, because it probably will, and there will be negative consequences. But I'm sorry, if you're in one of those countries, I want to give them the ability to hold dollars. And so one of the things we haven't seen, though, and I know you're an EM guy, 99% of stablecoins today are dollars. It's a $250 billion market. I've called 500 by the end of the year. Secretary Besson said 3.7 trillion. I personally don't think we're going to stay at 99% dollars. I think if you look at regular fiat transactions, like 57% or something like that is dollar-based, fine. Yep. My gut is like we're going to probably be somewhere in between. But FX is a $7.5 trillion a day market. To me, it's like better if it tokenizes, because you eliminate risk. Like most of them settle T+2. Do you think that FX is going to be the next big thing, or do you think it's going to be equities that tokenizes, or is it just going to be native assets or alts? Like, what's next?
That's a good question. I'm going to guess, just because people are going to demand more 24/7 trading, it's going to go to the places where that isn't. But FX to me seems like the one that makes the most sense, because people travel all the time and it just makes it easier. I would joke with everyone that, like, if you have yen and that's the only thing you have no credit cards, and all you have is yen in your pocket in the US, you can't walk into a coffee place and do it. If you have stable coins, you can do that all over the world. And so it's not currency, it's not a credit card, it's just a form of transactions that allow it all the time. So I think the currency side is going to be there. One of the things I want to go back to, because I'm very optimistic on a lot of emerging market countries and currencies right now.
Yep.
And believe it or not, one of the reasons is because of stable coins. I think stable coins put a spotlight on the governments that have been allowed to do what they've done. I think AI does that as well. So I think leadership changes, like what Javier Milei has done in Argentina. We have some important elections coming up in Chile and Brazil, and they've been leftist governments now for a period of time. And so more libertarian, more, Javier Milei, we'll throw Trump in there in terms of the right leaning side. I think these will help their currencies on the traditional side, not because the locals will feel more comfortable, but I do think it'll bring more money from foreigners in. And so the one thing about currencies is the problem for emerging markets. They've been roped into the we're behind the curve to technology. We've been, they're way behind in terms of innovation. But sometimes being behind in innovation helps you because you can leapfrog very quickly. And with AI, I do think a democratization of education is what emerging markets need. So I'm a big believer that stablecoins are actually going to help emerging markets without people knowing. And so far this year, the Brazilian real has done well. The Chilean peso has done well. A lot of that has to do with dollar weakness and the tariff policies. But I actually think there's a change coming. And they're also going to benefit from the commodity boom that I see happening from the build out of AI power needs and the hardware necessary for humanoids and robots that's coming up.
So it sounds like you're saying in a way that dollar stablecoins are going to keep those local governments honest in a way, more honest. And then is it fair to say that Bitcoin is going to keep the dollar honest?
That's the beauty of this. Whenever people say, I'll hear people make the argument that, well, stable coins are going to hurt Bitcoin. And again, I can't emphasize enough that if you can, my brain already knows what 10 years is going to look like. Like, I could be wrong, but I have certainty that AI will disrupt all established businesses, no matter what they do. It does not matter. It will destroy them. I've had people say, well, what about commodities? I'm like, fusion's coming. It's going to destroy energy companies, and that's going to only be solved by AI. We're going to make advancements which will make the established things that we think we know that have been certainties in life just become less certain every single day. And the only thing that has a moat at the end that is in the asset world, which is now the, fifth biggest asset in the world, soon to be the second by the end of this year, if my thoughts are right, is Bitcoin. And the more that the Mag 7 gets hurt by the AI side, you're going to have all of those companies shrink in size. So what I talked about on this week's video is I just see the transfer into the tokenized world with a lot of, like you said, 81% of the companies are of greater than 100 million are private. So if you go match all this up and you say, let's assume that ecosystem keeps growing, but now it gets up to 100% are private because the fiat system companies are just gradually, as I said, going to the graveyard. The money's still going to be invested somewhere where it can produce more value, which is a game of what do people think is going to benefit. And I think that's where Bitcoin is the only game in town to outperform going forward as a store of value.
What gets me excited is that what crypto allows you to do is to put private property into the internet. People don't realize this. Before we had crypto, you couldn't put anything in the internet. Like, they would just take the guys who control the internet, take your data, and off it goes. So now you have private property in the internet, and that's where the AI agents live.
Yep.
And that's their medium of exchange, right? Is on that digital property, that digital commodities, those digital currencies. The one thing we didn't really talk about with stablecoins, and I think is going to be a really nice tailwind, are alts. So alts we kind of define loosely as anything beyond Bitcoin, maybe Ethereum, it's its own category. Mm-hmm. But again, going back to how you derive value from stablecoins, because stablecoins aren't going up, you try to get yield. I think another direction of travel is going into alts, exploring these crypto native instruments for the very first time, whether it's a layer one, like an Ethereum, a Solana, a Sui, an Avalanche, or going into some of those apps like Aave, which is a borrow lend or whatever, they're just continuing to expand. How do you think about the alt space? Clearly very, very bullish on Bitcoin based on what you said today and previously. Where are we with alts? They've been kind of lagging Bitcoin.
Yeah, they've been lagging. So my I'm going to use a traditional finance historical period to represent what I think is going on in alts, and also the reason right now I'm extremely bullish on things changing for the alt space and Bitcoin, but the alt space in particular. So this reminds me a lot of the post-internet bubble, the dot-com bubble as it got named, where a couple things happened. It blew up from 2000 to 2003. It took another, honestly, decade to get back to the all-time highs.
Yeah.
And during the period, especially from 2002 to 2005, whenever there was any kind of rally in these internet stocks, there was just massive supply to come into the market. And when I look at the way vol has contracted in all the assets inside crypto, I mean, Bitcoin vol is below 40. Like you've seen a very, very meaningful collapse in volatility in a year that has been extremely volatile for most assets, especially with the tariff situation. The reason that's important to me is as I've gotten to know the space more, I can just tell that there were a lot of people that had supply that they needed to sell. This is not a I want to sell it. This is people that to me probably are living off of more tokens and coins than I realize that survived through the 2021. But when you look at the charts and you realize that most of these things either never got to the highs or they're still down 70 to 80% from the highs, it reminds me a lot of the dot-com bubble. Now, Bitcoin is a completely separate thing, but that's what makes sense to me because Bitcoin is not an alt. So these are two different things. You're getting institutional adoption on one side, which makes sense. There's no institutional adoption happening on the alt space. Now you're starting with Circle to get a spotlight shown. I think we're going to work through the supply. I've said in other interviews, especially in the last month, that I'm watching Ethereum. I think Ethereum is now the most important as the gateway to the alt season changing, as people want to say. From a technical basis, I think we need to close 2 solid weeks above 2,700, and then I think everything will change. We continue to find a lot of resistance and supply at 2,400, 2,500, 2,600 every single time we get up there. But once we work through it, and you made the point, and this is what started the question, Ethereum really should be tied to stablecoins. And if stablecoin volumes are going to explode, then Ethereum has to be a part of it. And that's where I think we are. The network effects will kick in and it'll start going.
Yeah, I mean, Ethereum, the other thing that happened with Ethereum recently is it just hit 10 years old. It hit its 10-year birthday, which in traditional finance, where we both come from, 10 years is an important milestone because now you have historic look-back data. This is an ecosystem that's never gone down once in those 10 years. And it's about to house maybe trillions of dollars of stable coins. And if that's not a strategic ecosystem, I don't know what is. And these are commodities, no different than oil. In fact, it's called digital oil.
Yep.
So like I've been out there saying it's crazy to not have a strategic reserve in this asset class if it's supporting that amount of stable coins and money market funds and these strategic assets for our entire economy. So anyway, that's where my head is.
Well, that's why when Tom Lee, who catches a lot of flack because he's always bullish, and not just in Bitcoin, but in the stock market. But if you listen to Tom Lee's arguments, they're no different than what I believe in. He says it differently. I trade markets. He just says they go higher, which is fine for him. But the main point that he makes is that there's and this is simplistically the situation he has, and we differ on the stock side. But what he says is there's a massive transfer going on where we have a labor shortage. We don't have enough people to work. We need artificial intelligence to fill the gap. So we are going to go from a world where we've been paying massive amounts of compensation to people, and it's going to be replaced with low-cost technology. And he argues for technology stocks. What I'm arguing for is profit margins, and the profit margins, because you reduce compensation, will grow. Well, he just decided to get involved and do exactly what you're saying with Ethereum and have the first corporate balance sheet Ethereum side. I just think when you listen to what he says, he's saying the same things we're saying. But the most important thing that he said to me that I heard was, I know all the banks are going to start issuing stable coins. I want to get in front of this. That is just smart investments of the timing is now. I don't think people in Bitcoin could have said that anytime, before 2023, that they wanted to front run traditional finance investors. But once the ETF came, you got that. Once the corporate strategy, Michael Saylor, started catching wind, you've got that. I think Ethereum is next in line, and I think people will understand the digital oil side much, much more by the end of this year.
Tom just launched a Treasury strategy, Bitmine, right? So this is a really interesting, I guess, question for investors now. Do you go after the native asset, which is kind of hard? You have to figure out a whole new operational way to do it. Do you go on a Coinbase exchange, blah, blah, blah? But you get like potentially true access to the underlying asset. do you go into an ETF, which is just another equity, or do you buy one of these like companies now, these public companies that are issuing equity to buy the underlying crypto assets, with maybe a shell, maybe something else going on top of it. But we're seeing an absolute explosion, at our company in these treasury companies popping up. Do you think that this is going to be a near term bubble, or do you think that these things are here to stay? Are they going to be complementary to like the native asset, the ETF? They're going to all live in tandem. Like, how do you think this plays out?
Oh, I think it's going to continue to explode. I mean, so in 2020, when I first, let's say, decided that I had missed the boat on Bitcoin in terms of the understanding of it, I had already had an understanding of the blockchain and the future of the role that it would play. I believed that Bitcoin would go higher. I just could not connect it back in a way when it was, before 2020. I mean, you're dealing with something that was still a small asset. It just didn't make sense, in my opinion, to kind of get heavily involved with thinking about it, since there was really no argument that could be made. When Michael Saylor said to me over a podcast, my company was dead. The government was killing it because they were debasing me. So any cash that I still had left in MicroStrategy, which was about $1 billion, they were saying to me, we don't care about your company. We're moving rates to zero. And I didn't have a choice, because on the other end, I was getting destroyed by exponential innovation, meaning Microsoft. So he's got a business and he's like, either I retire and just take my money and run, I find some way to do some kind of new startup, or maybe invest in 5 companies with $1 billion and see if any of them can create a business, or I go buy Bitcoin. And I just decided in the interim, I'll just go buy Bitcoin, because at least I'm taking the government side off. What he didn't realize was he was also hedging against obsolescence from artificial intelligence. And that's the point that really connected with me at the time. Not that AI at that point was a gobbled up thing, but I realized that if the government was going to print money and keep growth going at a fast pace, well, that would funnel into the tech side. The tech side, exponential innovation, will continue to speed up, which I already believed in. And so now I was at a point where I believed that, here we are. So Bitcoin will survive, because it can't be out innovated, because it actually isn't an innovation. It's a view from individuals that it's a store of value. And like gold, that can last for centuries. It has a moat, just like religion, but everything else is an innovation. And so I've come to the belief that we've reached a point where the obsolescence of companies is part of the equation for what Bitcoin is. And the crypto ecosystem, that is the alt side, all the utility tokens, they're just the place that eventually the traditional finance world will invest in, because they're more comfortable with digital oil than they are with digital gold. Digital oil is something for them to invest in. Digital gold is much harder to invest in.
Totally get that. I mean, it was Ethereum that really turned the light bulb on for me. It's like, wow, I can really do something with this thing.
So the end result is, Chris, we're going to have more companies in Michael Saylor's position going forward, and they're going to have that same choice. And I think we've seen it with El Salvador. We've seen it with now, Bolivia's now. I highlighted the numbers that are showing there. Every country in the world that is in trouble is in some way thinking about it, adopting it. And every company is going to have to do it as well, as far as if they want to survive in any way. It's a bet.
It's a sovereign Michael Saylor play. That's what you're describing.
Michael Saylor has said it before that he thinks Apple should buy it. Of all of the Mag 7, the one company that it makes the most sense to me to buy is Bitcoin. And so if I had to make a prediction on which company out of everything in the S&P 500 that isn't going to die, but that would do it to signal that they want to be a major player in crypto and maybe a digital bank, since they have the digital wallet already set up in your hand, I think Apple would be the one that would would get involved as well. So
1,000% agree. And we didn't even get a chance to talk about the Clarity Act, which is about to follow the Genius Bill, which will finally, and what we believe at CoinFund is, this is one of the final hurdles to truly mainstreaming the asset class, because we're we're going to get these stable coins are going to be great, but all the institutions are just waiting for rules. And
Yep.
what Clarity will do is tell you, hey, this is a commodity. This is how you treat it. This is a security. This is how you treat it. To us, that's going to unlock, the floodgates. I think it's much more complex regulation or law to get passed because you have this bifurcation in the United States where you have, commodities and securities. I don't know if you know this, but I'll tell the viewers a little piece of trivia. Everything in the world in the US is a commodity except for onions, securities, and movie receipts. And if the Genius bill passes, stablecoins, they actually carve them out of commodities. But the problem you got is you got two different regulators, and they have two different overseers. One is the Ag Committee, the other one's Financial Services Committee. So there's a little more complexity. Do you think that this bill gets done, or do we just? I also know Brian Quintenz and Paul Atkins, and they're going to work together to try to come up with a regulatory framework. But it'd be really nice to have a law that defines it. Do you think we're going to get a law?
I definitely think we're going to get a law. I think if we saw the big, beautiful bill, figure out a way to get through, and just from the reality check of the stablecoin bill. So when the Genius Act, when the stablecoin bill got to the point where, I forget what the final numbers were, they were 69 to 31, somewhere in there. That doesn't happen in the United States anymore. You don't get bipartisan on anything of that importance. And this is with Elizabeth Warren, just coming out of a period where nothing was allowed to go through. So that just says that the political pressure that getting stuff through on this is so important to people that I think it will happen. It might take a little bit more time than they think, but I do think it'll happen.
Awesome. Well, sir, I've really, really enjoyed this conversation. I learn every time you open your mouth. I benefit, so thank you. And how can people contact you?
Well, first of all, they can find me on X. They can always reach out to me there. LinkedIn, I'm great to respond to as well. They can see me on my YouTube videos and my Substack. If they can't find me, they're having a really hard time. I also do institutional research for 22V, really deep dive stuff, mainly on AI, not as much on crypto. But for people that want to learn more about what I was talking about with isomorphic labs, how to make money on that, how to make money with copper. The copper story to me is a massive one. I do a lot of deep dive stuff on humanoids and things along those lines. That's where my passion is. And Bitcoin has just joined the party because it's there. So I appreciate the time spent, and this was great.
Always a pleasure, sir. And we'll catch you next time. Thank you so much.
You got it.
If you have any questions about how to navigate the current environment, Wealthion can help connect you with a vetted advisor to get a free portfolio review. Just click the link in the description below or head to wealthion.com/free. There's no obligation, and it will just take a few minutes of your time. Again, that's wealthion.com/free. Thanks so much for joining us. We'll see you again next time.